Guys, as I promised you guys last time that I'm gonna do a series of videos. There I will talk about breaker, order block, fair gate value, liquidity, then risk management, range. Maybe I'll try to touch also a bit of supply and demand. So the most important things that I'll focus more is about liquidity, breaker, and also I'll try to use a Fibonacci. I'll use another video that is gonna be unique only for Fibonacci, how to get a retracement for like a continuation trend, those kind of stuff. So today I'll try to talk more about the block and the breaker. As you can check this thread, for those people that they're on my channel, they understand that I shared this thread, and also another one I shared about the setup index, and I told them where setup index is going to buy and where it's going to sell. Why I did like that? Because I do understand what was happening and where market was going, and this thread here, I was in this thread, then I put my target, market reach on my target. I supposed to hold my trade, but I didn't hold my trade. What was happening is I push, I close my trade. Then when I come the next day, I found that the trade is already gone very far. So I was angry. Why did I exit the market early while I knew that market is going to buy very hard? So sometimes when you are in profit, just try to lock your profit, put your stop loss in the break even. So even if the market just start coming back, then you start looking for the market. Okay, what is happening? And the mistake that I did that day was because when market reach on my target, then I say, okay, this is my first target as my first TP. Then market has to return on a certain level so that I can buy. So I wanted to move the market according to me the way I want. That's the mistake I did that day. Then okay, we are not there. But today I want to show you something about the block. If you can check a block, check this last candlestick here. This is a block. Check this one here. This is a block. Why this is a block? Because this was the last up candlestick that market used. If you can check, market used before they take out this liquidity. And check now what happened. To show you that this is the block, markets returned to the same level. Then market did what? Push again down. They took out this liquidity. And so it's so simple to understand the block. The block is always be the last up candlestick. So this is the last up candlestick that market use. This is the last down candlestick that markets sold from to go up. And you see, that is so simple. This is like in a simple way a block that you need to understand, like how is the block is working. Then another what I want to talk specific is about the block and breaker, because we can say this is a breaker, this one, because this candlestick has been used before they take out this liquidity. Markets check out what happened here when market creates a new low. It's just a small low there, but markets return back to where? To the block. That is a block. Markets return to where? To the block. Return to the block, then drop down. So when markets start dropping down, market creates a new low. That is our liquidity level. You see, this is our liquidity level. So this is the low. Then when markets start going up, markets start buying. When market is buying, where is your target? You as a trader, where is your target? Because when you're trading, you must know the entry points, the exit points, and where is your stop loss. Let's say you get a confirmation from this level, market is buying here on this level, because market close up this block here. Check this one. Then you get the confirmation market is buying. Okay, let's say your entry is here, your stop loss is below here. Then what is your target? This is how you need to find the level where there is a liquidity, because those level of liquidity is where people they go, like most of the retired trader, they'll go there and they start placing what you call their sell stop. Hold these levels here. Now I will show you how this level is so powerful for us to use them, so that we can take our what you call our to be our TP. Then market gets on this level because of the breaker. You check, pull back, goes up this level here. Check this candlestick here. Market use again this candlestick to pull up from this zone here. Market pull down. Then what was happening again? Market push up. But one thing you need to put in your mind is, what is the last candlestick that the market use before they take out uh, the liquidity? So if you can check yourself, what is the last candlestick between the two? I'll tell you, is this one. This one is the last candlestick that market use before take out this liquidity, this one. You see what is happening here? Anyway, then markets take out this level of liquidity. We can say this one has been take off. Here is off. Here again, this one again is off. Do you see that? Off, off. Then what happened next? What is happening next? Market close up. Market didn't close below, close up. So all this was been taken out. The markets close up. Markets return to this level again, test and continue where? Continue up. But if you remember, when I started, I told you about this candlestick also. You see that candlestick? You see what is happening? You see, this was the last candlestick that they used before they take out this level of liquidity. Then markets return to that breaker, then push up again. So when markets start pushing up, this is where things now become so powerful for us to understand now. Okay, we create this level. This is our liquidity. Markets drop. Then here you just come and start buying. You just start buying. One thing that you need to understand here on this level, we've got this one and we've got this last candlestick that market used before take out this liquidity. But on top of that, we've got this block that's never been used inside the breaker. Then markets return to the level, then push up. So when markets push up, market creates a new high. Why market creates a new high from this level? Market creates high from this level because we took out this level of liquidity. Now imagine you bought from here. You are not closing your trade until you see this liquidity being taken off. Then market creates a new high from that level. We create a new high. Then markets return down. Where did the market going? Because market is dropping. Okay, you know. Okay, I take out my profit from this level. Then the market is dropping. You can even hold your trade, but if you want, you can also sell again. You know there is some people that will tell you, me I don't sell boom because it's going against the spike. Man, if you understand what market is doing, you sell boom, you buy crash. So nothing is wrong, but for the people that are telling you that, is the people that are using indicators always avoid going against the spikes, because for them market has to sell or market has to buy, those kind of stuff. But for someone who's a good trader, is not going to tell you that, because this level here has been used already. From this level goes up, we create a new high. This one taken off, the other one there also off, this one also off. Then markets return where? If you can check, markets return to our other block there. See, markets return to our block. Then check what happened after markets return to the block. Markets bought crazy again, went up. It's going where? Because if you are buying from this level, you know already your target. Where is your target? Your target is this level. That is your first target, and your second target is there. Then check what happened from that level. Market did what? Start dropping now. Drop. This is why now I come in, because I couldn't see all this move. Then what I saw was this level, because if you can check this block was not being used. This is where markets return to the block there, so that you can start buying. Markets return to the block, then we start doing what? We start buying from here. This is where I place my entry, and my target was here. That was my target. So my first target, I only had one target. I didn't have another target because I didn't check properly on the left side. That was my target. So my target was here. I placed my target here. Then what happened? If you remember, guys, I told you I was waiting for the market to return to a certain level so that I can do what I can buy again. But market never come to that level. I was waiting for the market to come to this block. Why? Because on this level, I use supply and demand level because I know this is a rally. We've got a base, then rally. So for me, this level was so powerful. I was waiting when I see this move. I was waiting for something like this for the market to come here. Then from here we push up. That's what I was waiting. But I don't know. Binary saw my stuff, so binary blocked me not to come down. Then market consolidate from this level. Then boom, market shoot up. You check what happened. Market shoot up very hard. But if you can check the logic, what I'm trying to show you, I'm just trying to show how you can use a block, how you can use a breaker, how you can use a liquidity as your target. Because you know already on this level here, this is where there is those buyer stop. So people don't come and place their buyer stop from this level. Market will try to target those down there. Check out this level. If someone someone puts the buyer stop from this level, then you see that market is gonna do what? Market is pushing there, then market come down, collect the order there, then start dropping again. So this is so simple. This is so simple. Sorry guys. So this is so simple. Then let me move to setup index so that I can show you again the block, how you can use the block, and how you can get the entry without any stress. Check again this side. This trade here, I was also in this trade, and my target was this one here. I have the analysis. I have the analysis that I put. So I put here the target. That was my target. This one also was my target, and I'm sure this one also was my target. But if you can check properly, when market bought from this level, market went up, collects. This was I think it was on H1 if I'm not mistaken. Yeah, from on H1. I told people this was my target, my first one. This was my first one, and my second one was this one, and the third one was that one there. But check what happened. I bought somewhere from here. Market went up. Return again back to my entry. My stop loss was below. Then goes up again. Return back again to where? To the breaker. Then markets push up again. So simple. Then when markets get on this level, as collect all the two targets that was I put, then I told people, okay, market is gonna come down here, so this is the place where we need to buy against what we can go long. Check. This is the block that was being used again for market to goes up. Why this block? Because this is the last candlestick that market used before take out this liquidity. Then the bank, they must use it again to collect their, because here they try to sell so that everyone can sell also. Then poop, they shoot the market up. So here they are losing, and here they are buying. Let's say maybe here they have money, they put money maybe 3 million here, they are losing because market is going up, they are losing. Then markets here also they are buying at the same time. They sold here, then here they start buying. Here they are losing, and here they are on big profit. Then what are doing? They need to come back to this block. 50% of this candlestick. Let me show you what I mean by that, so that you understand that we are not trying to manufacture things, but we are trying to get the algo of the market and what is happening. You see that they always come to the 50% of the block. 50% of the block, they collect their losses. Now they are not losing anything. Now they push market where? Push market up. So we are buying from this level. We are buying from this block. Then where is our target? Our target is like how I always tell people. The first target is this one, the level of liquidity, where there's a liquidity. The third one is this one. The second one, sorry, is this one. The third one is that one there. Check what happened from that level. Do you see what is happening from that level again? Market bought here. Market bought here. This is our block that was being used. we push the market up, we collect this one, we collect this one also, then markets collect again this one, but this one is where, check, this one is where, is inside the block, inside the block, because this was the last block that market used before take out this liquidity. You see, check what is happening. So simple, so simple things to follow and try to understand them. Even if you don't know how to use the block, you know how to use a Fibonacci. You understand that why market is selling from that level, because we've got the high and we've got the low. Markets return where to 7.5, 70.5. Then markets start dropping inside where, inside the block. Then markets start dropping. Let's say if market is gonna sell hard, where is market going? Where is gonna be your take profit? My take profit is gonna be this one here, this one below. That is my first take profit. Then where is the third? It's gonna be this one here. Because why this one? Because this is the block. Market use it for the first time. Maybe it's coming again for the second time before we push up and come take. So the possibilities, maybe from here we take out this one, or from down here we take out this liquidity level. So this is something that we need to watch and how it's going. And another thing is the crazy one is V75. You see how he's using the block. It's going up, but the way it's going up and it's trying to trap more people. If we can check here, this is the block. Market return, buy again, push up. Again here, market buy, push up. I saw another one somewhere. Yeah. So as you can check, again here market accumulated and push up. But if you go to daily, you understand that this thing is gonna come down again, because we have got so many blocks that have never been tested. Check here. This block never been tested. This one never been tested. We only break the liquidity. We took out this level off, but market never tests this one here. And we've got another one, the bigger one here down. Market never test. So sorry guys for the noise that is happening. You know, having kids is not a joke. So sorry guys for the noise. That I'm sure I'm done with this video. But try also to practice, try to understand how the block is being used and how the liquidity is going out, you know, those kind of stuff. You imagine this candlestick on a weekly time frame of yesterday. Check how this candlestick was big. This candlestick just ran fast so that you can take out this eye. This eye was being taken off. Let's see. So there is another strategy that I'm learning. I'm trying to practice it properly. That is a Wyckoff strategy. Then when I'm done with it, then guys, I'll show you how to use it. I'll make a simple video. You know me, always make a simple video. Try to make you guys understand. I don't wanna go like to make it hard for you guys. So I'll make it very easy for you guys also to understand and master it. I promise you guys, I'm gonna show you the picture of my crash 1000, crash 500. Sorry, boom 500. Let me show you guys what happened when I took that entry. Then what went wrong? So this was my entry. Yeah, check. This was my entry. I took the entry. My target was there, and I was waiting for market to come in so that they can go long again. But market never come back again to this side. Sharp guys.